Okay, hello guys, welcome back to my channel. Today I'll be talking about the silver bullet. Actually, I want to start doing daily videos about the silver bullet of the previous session or of the previous day. So comment down below if you want that, or if you would appreciate that. So without getting too complicated, let me get to the video. So first thing first, plug the. So now I'm gonna use the which is from 3 a.m. to 4 New York time. Time is always set to New York time, right? So this little bullet, this is your silver bullet. We're gonna see if we are going to go bearish or bullish. From the previous price action, you realize that the market is a bit on the 5 minute time frame. The market was very high because we have this market, we have high, this low, we have this high, then we have this low, then we have this higher low, then we have this lower low. So the market is bearish, making higher highs. I mean, making we have this break of structure. The market might be bearish, but just for the silver bullet time hit, we have this change in direction, right? Well, it's making this low, and so we have this. We have a break of structure from here. We have our change in direction. This market structure shift. This is our break of structure. So now we don't look for price to go down. We're looking for price to go up, right? So on the 5 minutes, we have this fair value gap here, approaching it, but it's highly unlikely that the market might come back to this fair value because it already tapped into this fair value gap and went up. So the market broke structure and came back into the fair value gap before going higher and breaking this high. So the market is unlikely to go back into this fair value gap. Let's go to the 1 minute time frame and see. Frame, the same thing. The market made this high, tap into this fair value gap, and while it was tapping into this fair value gap, it took out this liquidity, the liquidity here, the liquidity that resided here. Market when it was tapping into this fair value gap, then it fell to make a higher high, but again didn't make a lower low. So again it made a higher high. So it breaks structure and this high. So when it comes and make this low is higher than this low. So the market is going up and it broke this structure again to the upside, structure to the upside, signaling that time is still intact, right? So we have this break of structure with a displacement candle, two displacement candle. The first one failed to close above this. This is tricking traders, breakout traders. This not breakout traders. Retail traders when they see this high resistance to keep the market down. So when the market fails to close above or displace above this high, breakout trade to look at this as a resistance and sell the market to hoping to get the market to go down. When we get here, the next candle shoots up. So when it shoots up, let's see that when the market broke this structure here, market structure here, it left a fair value gap. It left a fair value gap which has not been filled. which has not been filled, right? So we come. So this is the fair value gap that I would like to see the market come as you see this high, but this is the fair value gap that I would like the market to come. Why would I like the market to come here? Because this is the only fair value gap which was not filled. Because if this one was filled, all the fair value gap here was filled. So this one the market up and it didn't fill this one. So the market has to come and fill this fair value gap before going up again. This one do not count because this one it's a trap. This one will act as a trap if you take your trade from here anywhere from here without recognizing that there's a fair value gap down here. The market will and give you a little bit of profit before taking. So the market went up. So we expect the market to come into this fair value gap before going down. So the came after this low, after this high here, this high here, the market came and made this low, made this low. You can realize that the market didn't close below this fair value gap. It closed inside the fair value gap, tricking traders into thinking that the fair value gap is valid, but it's not valid because we want the market to see the market going to this one. Because if you can see from here, all the fair value gaps have been filled, excluding this one. So you want to see the market coming back to this one. Make this fail to make a higher high, then make a lower low, breaking this structure. Breaking this structure. This is not a break structure. This is a liquidity grab. This is a liquidity grab. This one, a liquidity grab. This is raising people to think that this is a protected, without realizing that we have a fair value gap here that has to be filled. So the market came, can take your entries here at the open or at the 50% of the fair value gap. I usually look at the size of the fair value gap, and if the fair value gap is big, I usually like to see the market. I like to take my trades at the open of the fair value gap, so you can take your entries here, and where do you put your stop loss? So say you put your stop loss below this low because this fair value gap has been filled, so the market is unlikely to this low. So you can put your stop loss this low. This low will can put your stop loss because this high. This is our range to this high. So stop loss is between this and its range. Then it will take profit. Your partial. Where you gonna get your when you come here, these highs, this high, this one are relatively there's liquidity here, so the market to above this high. So market comes here, you can take out your partials, here. You can take out your partials here and move your stop loss. Just this is why we are anticipating the market to come into the fair value gap and tap into the 0.5% of the fair value gap, right? So why did the market come here? If you check from the left side, we have this breaker here. This breaker. When the market came and went up, then we expect the market to come into this breaker here or going up. So that's the silver bullet for London session of the what date is it today? I think it's the 21st of November 2023. Silver bullet. Okay. Check you later when I check you later when I talk about the PM or the New York silver bullet. Subscribe and comment down below if you want this to be a recurring series, or if this is something that you would like to see on a day-to-day basis, or maybe I can do it twice a week, or maybe every day of the week. Peace out.